Then Ramkrishna Forgings is the first management on the show. The company reported what was a weak set of Q1 numbers. There was slower growth led by weakness, especially in the domestic market. To discuss this, we have Naresh Jalan, who's the MD of the company, now joining in. Mr. Jalan, thank you very much for taking the time out. Well, yes, it's definitely been a slow quarter for you all, where the revenue growth has only been around 4% odd. If you could just tell us what exactly the growth in the domestic market was this quarter, and what was the reason for the weaker than estimated numbers?
I think we have done well in this quarter, considering all the circumstances related to elections and the heat wave. So there was a domestic offtake slowdown, as well as because of the weather and other things, uh, we had experienced a slowdown. But while you see the export, we have done considerably well. So overall, in terms of our Q1 numbers, we are very satisfied with the numbers.
All right, so let's talk about FY25 then. You're satisfied with these numbers. What is the kind of tonnage that you are expecting in terms of growth for the FY25 financial year? At the same time, the peak revenue that can come in from the JMT plant in FY25 and thereafter as it increases its utilization, along with the AICL acquisition. You had said that this business could be close to around 500 crores by FY26. So what are your targets for FY25 for that one? Tonnage and, the revenue from JMT and AIC?
I think in this year, we are looking at almost 15% plus volume growth in RKFL on a standalone basis. And we are on track with the current order wins and with the strong order pipelines, both in exports and the domestic. We are expected to do better than 15% in terms of overall volume growth for the full year. And in terms of JMT, we are looking at almost 100 plus crores in this year. And from ACIL also, we are looking at almost 125 to 130 crores this year. And we are on track on both the companies. Both the operations have considerably taken traction. All the customers are back. But in terms of approvals and other things, which are taking time, but we are still on track for FY26 guidance to meet expectations.
Okay. Give us a sense in terms of what you are estimating, at least in terms of your margins, because your earlier guidance was around 23% odd. You've done 21% this quarter. What are the challenges that you're probably facing on the operational front? Do you think that you can scale or stick to that guidance of 23%?
No, I think we are on 23% plus margins also. If you see our presentation, so it is 23% plus margins we have maintained this quarter also, which is a one-off expenses of 17.5 crores, which has led to our margins as 21%. But one-off expenses, if you remove that, we are at 23.1% margins.
All right. Could you give us a sense of, the kind of tonnage that you will have in both domestic and exports this year? You've overall on a company basis given a guidance of upwards of 15%. If you could break that down for us for both your domestic and exports business?
Mangalam, we continue to drive volume 60-40 and or 40 plus in terms of exports. And I think in terms of tonnage also, we stick to that only. But realization being better in exports. So in terms of tonnage, I think it is very difficult for us to define. But in overall terms of revenue, we are very confident we'll be able to maintain our exports will be better than what domestic market happens for us.
Okay. Well, a couple of months ago, one of your orders were actually put on hold, we understand. The approval to supply powertrain components to one of the largest EV players in the US. Any update with regards to that? Any kind of rebidding or contracts for the order which could come up again?
I think we have given our statement in terms of our order wins in the presentation. And these are all business on ongoing basis. So obviously, anything on hold comes back also to business. So we have no specific replies to those queries. But in terms, I can tell you that in terms of exports, we are gaining market share as well as new businesses from new customers also. So, and we are on track to achieve our export growth.
If you could reiterate your order book for the viewers here, what was the order inflow during this quarter? What is it that you're anticipating in terms of further orders in the remainder of this year?
I think this quarter we have almost had an order, new order inflow of almost 1,600 crores to be supplied over next 4 years, including 200 80 crores almost from railways, which is a contractual. I think that's not for 4 years. That is an ongoing basis. So taken together, close to 600 plus crores of orders we have received in this quarter.
All right, and this run rate is likely to continue over the next couple of quarters. What's your outlook for the remainder of this year?
Yes, I think this run rate is going to continue. We are extremely confident with the kind of inflow of RFQs and other things are there from different geographies, and our penetration into new geographies which are also being worked out. I think we are very confident to continue getting on new orders and new traction from new customers.
Okay, all right, Mr. Jalan, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the view coming in from Ramkrishna Forgings. That stock is down around 1.5%. Revenue growth was only around 4% this quarter, margins at around 21%, but they are confident about their growth going into FY23, the remaining part of the fiscal. We'll take a break now. We'll put the focus on F&O at midday. Stay tuned.